Hey everyone, welcome back to Tesla Daily. Today is April 13th, 2026, and we've got a lot to cover. First up, let's talk about Tesla's exciting new messaging app. It's a game changer for how we connect. Next, we'll say goodbye to some classic models with Tesla's final farewell editions. It's a bittersweet moment for many of us. Now, we need to address Tesla's mixed performance in the first quarter. It wasn't all smooth sailing, but we know that ups and downs are part of the journey. On a brighter note, the Tesla Semi has officially debuted in Canada. This is a big step forward for their commercial vehicle lineup. And here's some great news. Tesla's full self-driving approval has given our stock a nice boost. We love to see that. Stick around, because we've got even more updates coming your way. Let's dive in. In a significant shift, Tesla is officially discontinuing the Model S and Model X, marking the end of an era for the company. To bid farewell, Tesla has announced the release of ultra-limited signature editions of both models, priced at a tongue-in-cheek $159,420. This price point is a nod to CEO Elon Musk's playful affinity for memes and the cannabis culture. Only 350 units will be produced, 250 of the Model S and 100 of the Model X, each featuring a unique garnet red paint and gold accents that distinguish them from their predecessors. The signature editions come equipped with exclusive features, including gold badges, special wheels, and a Lux package that includes free lifetime access to Tesla's supercharger network and the full self-driving FSD system. Performance-wise, the Model S Signature Edition boasts a staggering 0 to 60 miles per hour time of just 1.99 seconds and a top speed of 200 miles per hour with an EPA-rated range of 309 miles. Meanwhile, the Model X Signature Edition can reach 60 miles per hour in 2.5 seconds with a top speed of 163 miles per hour and a range of 303 miles. However, buyers will need to adhere to a strict no-resale agreement for the first year after purchase, preventing them from flipping these collector's items for profit. Violating this agreement could result in penalties of up to $50,000. This move aims to maintain the exclusivity and collector appeal of these vehicles, which are expected to hold significant value over time. Tesla's decision to discontinue these models comes as part of a broader strategy to repurpose the Fremont factory for the production of humanoid robots, reflecting a shift in focus towards automation and AI technologies. As we transition into this new chapter, it's clear that Tesla is evolving from a traditional car manufacturer into a multifaceted technology company. While the farewell to the Model S and X may be bittersweet for many fans, the introduction of the signature editions serves as a fitting tribute to their legacy. As we look ahead, the long-term outlook for Tesla appears promising, with the company poised to lead in both automotive and robotics sectors, despite the challenges of transitioning its production lines. Here's the next update you should know. In a challenging start to 2026, Tesla has reported mixed results in the first quarter, delivering 358,000 vehicles, which fell short of analyst expectations by over 1 million units. This shortfall has sparked concerns over demand and production challenges, with some analysts warning of potential margin pressures ahead of the upcoming earnings call. Despite these setbacks, Tesla remains a dominant force in the electric vehicle EV market, claiming a remarkable 54.2% market share in the U.S. during Q1, up from 43.2% the previous year. This translates to 117,300 vehicles delivered, outpacing all other automakers combined, who collectively delivered 99,099 units. The Model Y and Model 3 were the stars of the show, accounting for more than half of all EV sales in the country. Specifically, the Model Y led with 78,591 deliveries, while the Model 3 contributed an additional 31,672 units. However, the overall EV market saw a decline of 27% year over year, highlighting the competitive landscape Tesla is navigating. Investors are now closely watching Tesla's strategic pivot towards AI and robotics, particularly with the anticipated launch of the Model Q, a rumored sub-$30,000 vehicle that could significantly enhance Tesla's market presence. Gary Black, A prominent Tesla investor noted, "The Model Q could have huge upside, but Tesla lacks the marketing muscle needed to capitalize on it." Despite the recent volatility, long-term investors remain optimistic. Cathie Wood of ARK Invest continues to double down on Tesla, viewing it as more than just an EV manufacturer, but as a leading player in AI and robotics. She recently stated, "Tesla is not just a car company, it's an AI and robotics play." Looking ahead, while the immediate outlook appears mixed due to delivery misses and competitive pressures, Tesla's strong market share and ongoing innovations in AI and robotics suggest potential for recovery and growth. The company's ability to execute on its ambitious plans will be crucial in determining its long-term trajectory in the evolving automotive landscape. Now let's shift to the next story. Tesla is making headlines as it prepares for the Canadian debut of its semi-electric truck at Truck World 2026, scheduled from April 16th to April 18th in Mississauga, Ontario. This event marks a pivotal moment for Tesla, allowing the company to showcase its Class 8 electric truck to Canadian fleet buyers and industry decision-makers, especially as interest in electrifying freight continues to grow. The Semi aims to disrupt the trucking market, competing directly with traditional diesel models on operational costs and maintenance. However, it comes at a time when Tesla is also embroiled in a legal battle in North Dakota, where it is suing the state to open car dealerships in Bismarck and Fargo. This lawsuit stems from a North Dakota law that prohibits manufacturers from owning dealerships, a model that Tesla relies on for direct sales to consumers. Tesla argues that the law is outdated and restricts consumer access to its vehicles. Tesla just wants to be able to sell its vehicles in North Dakota and not force customers who would wish to purchase a Tesla vehicle to have to drive to Minnesota or another state to do it, stated Ari Holtzblatt, one of Tesla's attorneys. The Semi's production ramp-up is crucial, with a starting price of approximately $300,000, nearly double that of a comparable diesel truck. This premium price point is justified through lower fuel costs and reduced maintenance, which Tesla hopes will attract fleet operators. Initial pilot programs have shown promising results, with fleets reporting performance exceeding 400 miles per run. Despite these advancements, the market remains cautious, as the Semi's success is critical for Tesla's expansion into the commercial vehicle sector. The long-term outlook for Tesla's Semi hinges on overcoming legal hurdles and demonstrating its economic viability to fleet operators, while also addressing the challenges of production and infrastructure. As we navigate these developments, the future of Tesla's Semi could redefine the trucking landscape, provided it can effectively meet market expectations and regulatory requirements. Here's the next update you should know. Tesla has recently faced significant challenges, with its latest delivery report revealing a shortfall that has left investors concerned. In the first quarter of 2026, Tesla delivered 358,023 vehicles, falling short of the consensus estimate of approximately 370,000. This gap of about 12,000 vehicles highlights ongoing issues in meeting market demand, particularly as competition intensifies in the electric vehicle EV sector. RBC Capital Markets analyst Tom Narayan has lowered Tesla's price target by 4% to $480, while still maintaining an outperform rating, indicating some level of optimism amidst the challenges. He projects Tesla's revenue to rebound to $111 billion in 2026, up from an estimated $93.5 billion in 2025, with adjusted earnings per share expected to rise from $1.99 to next up another key development. In a bold move to expand its digital ecosystem, Tesla is set to launch XChat, a standalone messaging app, on April 17, 2026. This initiative marks a significant step in Elon Musk's vision of transforming X, formerly Twitter, into a super app akin to China's WeChat, integrating communication, payments, and various digital services into one platform. XChat will initially be available for iPhone and iPad users, leveraging X's existing base of over 500 million monthly active users. The app boasts advanced features including end-to-end encryption, disappearing messages, and screenshot blocking, all designed with user privacy in mind. As stated in the announcement, XChat aims to attract users with a privacy-focused design and no ads or tracking. The app has been in development since May 2025, with internal testing followed by a public beta launch in March 2026. This timeline indicates a rapid progression towards Musk's goal of creating an all-in-one platform that not only facilitates messaging, but also integrates payment systems and AI tools like Grok. Key features of XChat include end-to-end encryption, ensuring that only the sender and receiver can read messages. Self-destructing messages, automatically disappearing after a set time. The launch of XChat could significantly impact Tesla's market positioning as it seeks to diversify its offerings beyond automotive manufacturing and energy solutions. As we transition into a more interconnected digital landscape, the success of XChat may hinge on its ability to compete with established messaging platforms while maintaining a strong focus on privacy and user experience. In the long term, if XChat successfully integrates with other services within the X ecosystem, it could enhance user engagement and create new revenue streams for Tesla, further solidifying its status as a multifaceted tech company. However, challenges remain, including competition from established messaging apps and the need to continually innovate to retain user interest. As we look ahead, the launch of XChat represents both an opportunity and a challenge for Tesla, reflecting Musk's ambition to redefine how we communicate in the digital age. Next up, another key development. We are witnessing a pivotal moment for Tesla as the company has secured approval for its full self-driving FSD technology in the Netherlands. This approval, confirmed by the RDW, the Dutch Motor Authority, allows drivers to operate their vehicles hands-free under supervision, provided they remain attentive and ready to intervene. This development is expected to pave the way for broader acceptance of FSD across Europe, a market that is crucial for Tesla's growth strategy. The approval process took approximately 18 months, showcasing Tesla's commitment to meeting stringent regulatory standards. As a result, we saw a modest uptick in Tesla's stock, which reflects investor optimism about the company's future in the European market. According to analysts, Tesla's stock currently holds a consensus rating of hold based on 13 buys, 10 holds, and 7 sells, with an average price target of $402.29 per share, indicating a potential upside of 14.25%. However, it's important to note that Tesla's vehicles, particularly the Model 3, are facing significant depreciation challenges. A recent report highlighted that the 2021 Model 3 could depreciate by as much as 61% over 5 years, which raises concerns about long-term ownership value. Despite this, the Model 3 remains a popular choice, with over 1 million units sold since its launch. Looking ahead, Tesla's ambitions extend beyond vehicles. The company is actively developing its Optimus robot and plans to roll out robotaxis, which could further diversify its revenue streams. Additionally, the establishment of a new chip manufacturing facility, known as the Terafab, is set to enhance Tesla's computing capabilities, not just for its vehicles, but also for its other ventures, including SpaceX and XAI. In summary, while the recent FSD approval is a significant win for Tesla, we must remain cautious about the challenges posed by vehicle depreciation and the execution of its ambitious plans. As we navigate these developments, the long-term outlook for Tesla remains promising, contingent on its ability to deliver on its bold vision and maintain its leadership in the EV market. Here's the next update you should know. In a landmark development, Tesla has received approval for its full self-driving FSD technology in the Netherlands, marking the first time the system has been authorized for use in Europe. This approval comes after extensive testing over 18 months, during which the Dutch Vehicle Authority RDW evaluated the system's performance on both public roads and controlled tracks. The RDW stated, "Proper use of this driver assistance system makes a positive contribution to road safety," highlighting that FSD is designed to assist drivers while they remain fully engaged and responsible for the vehicle's operation. Despite the optimism surrounding this approval, the rollout of FSD in the Netherlands is not without its challenges. A recent ride in a Tesla robotaxi by Deutsche. Here's the next update you should know. In a significant setback for Elon Musk's Starlink satellite internet service, South African authorities have denied the company a license to operate, citing non-compliance with local ownership regulations. Musk has publicly claimed that the refusal is rooted in anti-white racism, a statement that has sparked widespread debate and criticism. In a post on social media platform X, Musk stated, "South Africa won't allow Starlink to be licensed, even though I was born there, simply because I am not black." He further alleged that he was offered opportunities to bribe officials to secure a license by misrepresenting the control of Starlink SA, which he refused on principle. The Independent Communications Authority of South Africa, ICASA, has countered Musk's claims, asserting that, now let's shift to the next story. In a recent post on X, Elon Musk, CEO of Tesla, has stirred controversy by sharing his personal experience with COVID-19 vaccines, claiming that his second shot felt like it was almost fatal. Musk stated, "The vaccine dosage was obviously too high and done too many times. I had the original Wuhan virus before there was any vaccine, and it was much like any other cold/flu. Bad, but not terrible. But my second vaccine shot almost sent me to the hospital. Felt like I was dying." This post, which has garnered over 15 million views, was in response to a testimony by Dr. Helmut Sturz, a former Pfizer toxicologist, who alleged that thousands of deaths may be linked to the "now let's shift to the next story." We are currently witnessing significant challenges for Tesla, as critical evidence has gone missing in a violent crash investigation in Bergen, Norway. The incident, which occurred on May 13, 2023, involved a Tesla Model Y taxi that accelerated uncontrollably, reaching speeds of 90 kilometers per hour before crashing into a kiosk in a busy public square. Remarkably, no fatalities were reported, but the potential for tragedy was high, especially given the plaza's usual foot traffic. The missing piece of evidence is a network card that stores crucial crash data, raising serious questions about the integrity of the ongoing investigation. According to reports, the vehicle's event data recorder, EDR, indicates that the accelerator pedal was pressed throughout the incident, yet Tesla claims to. Well, that wraps up our update for today. Thank you for joining us on Tesla Daily Insights. We appreciate your time and enthusiasm. I'm looking forward to catching up with you in our next update. Until then, take care.